Welcome back to Being Financially. Structure your business to minimize taxes and maximize deductions. Choosing the wrong structure could cost you thousands, so it's crucial to make an informed decision. In this 2025 guide, I'll break down the differences between setting up an LLC and electing an S Corp, as well as the tax implications of each. I'll also help you determine the best structure based on your income and goals. Let's keep it simple, practical, and tailored to you. As a freelancer, you have the flexibility to work with multiple clients and manage your own schedule. Setting up an LLC can provide you with liability protection while allowing you to pass through your business income to your personal tax return. This can be advantageous for lower income freelancers who want to avoid double taxation and maintain simplicity in their business structure. On the other hand, if you're an investor or solopreneur with higher income and significant business activity, electing an S Corp could be more beneficial. This structure allows you to pay yourself a reasonable salary and take the rest of your income as distributions, potentially reducing your self-employment taxes. However, it also comes with additional administrative requirements and costs, so it's essential to weigh the pros and cons based on your specific situation. When it comes to taxes, the structure you choose can greatly impact the deductions you're eligible for and the amount you owe to the IRS. By understanding the tax implications of an LLC and an S Corp, you can make strategic decisions to minimize your tax liability and keep more money in your pocket. Ultimately, the best structure for your business depends on your unique circumstances and financial goals. I'll help you navigate the complexities and make an informed choice that aligns with your vision for success. Let's work together to simplify the decision-making process, provide practical guidance, and tailor the best structure to fit your needs. Your financial well-being is our top priority, and we're here to support you every step of the way. Here's to a prosperous and tax-efficient future. If you're a freelancer or small business owner, you've probably heard of LLCs and S Corps. But what exactly are they, and how do they benefit you? Let's start with LLCs. A limited liability company is a legal business structure that offers protection for your personal assets. This means that if your business is faced with a lawsuit or business debts, your personal belongings, like your car, house, or savings, are generally off limits to creditors. For freelancers and small business owners, this protection is a huge advantage, providing peace of mind and security. On the other hand, an S corporation is not a business entity in itself. Instead, it's a tax classification that you can elect with the IRS. So what does this mean for you? Well, when you form an LLC, you have the option to be taxed as an S Corp. This election can lead to significant tax savings as it allows you to split your income into a salary and distributions. By doing so, you may be able to reduce the amount of self-employment tax you owe, ultimately maximizing your take-home pay. By now, you might be wondering, which option is best for me? The truth is, it depends on your specific business and financial situation. An LLC provides valuable asset protection, while an S Corp election can offer tax advantages. However, keep in mind that there are specific requirements and regulations for both LLCs and S Corps, so it's important to consult with a legal or tax professional to determine which option is the right fit for you. In conclusion, LLCs and S Corp offer freelancers and small business owners valuable protections and tax advantages, while LLCs shield your personal assets from business liabilities. S Corp allow for potential tax savings through income splitting. Understanding the benefits and considerations of each option is crucial for making informed decisions about the structure and taxation of your business. Are you tired of paying hefty self-employment taxes on all your LLC profits? It might be time to consider switching to an S Corp. When you operate as a regular LLC, every dollar of profit is subject to self-employment tax, which can add up quickly. For example, if your net profit reaches $100,000, you could be shelling out over $15,000 in self-employment taxes alone before even considering income tax. But with an S Corp, you have the flexibility to divide your income between a reasonable salary and owner distributions. The key advantage here is that you only have to pay employment taxes on the salary portion rather than the entire amount. However, it's crucial to remember the importance of setting a reasonable salary for yourself as an S Corp owner. Failure to do so could attract unwanted attention from the IRS, leading to potential issues down the road. So if you're looking to minimize your tax burden and maximize your profits, it's worth exploring the tax differences between an LLC and an S Corp. By making the switch, you could save yourself a significant amount of money in taxes and ensure that your hard-earned income stays where it belongs, in your pocket. Thinking of upgrading your business structure from a simple LLC to an S Corp? It's important to understand the costs and complexities involved in making this move. Running an LLC is straightforward. You can handle it on your own and easily report your business income on your personal tax return using a Schedule C. However, transitioning to an S Corp introduces a whole new level of complexity. Firstly, you'll need to set up payroll services to pay yourself a salary as an S Corp owner. This involves additional administrative work and potentially hiring professionals to manage payroll efficiently. Furthermore, as an S Corp, you'll need to file a separate business tax return using Form 1120-S. This means added expenses for tax preparation and compliance. Managing the financial aspects of an S Corp also requires bookkeeping services and possibly an accountant to ensure accurate record keeping and compliance with tax laws. Additionally, S Corps often have stricter state compliance rules compared to LLCs, which may necessitate additional time and resources to ensure full adherence to regulations. Considering all these factors, it's recommended to make the switch to an S Corp only when your business is generating a substantial net profit, typically around $60,000 to $80,000 or more per year. This financial threshold ensures that the benefits of an S Corp structure outweigh the costs and complexities associated with it. Ultimately, while operating as an S Corp can offer certain advantages such as tax savings and liability protection, it's crucial to weigh the costs and complexities involved in this transition before making a decision. Proper planning and understanding of the financial implications will help you make an informed choice that aligns with your business goals and financial capabilities. When comparing earning potential between a freelancer making $100K a year and an investor focusing on real estate or dividend income, it's important to analyze the savings and costs associated with each structure. The freelancer earning $100K a year has the benefit of being their boss, setting their rates, and choosing their projects. However, they also have to consider expenses like health insurance, retirement savings, self-employment taxes, and fluctuations in income. Saving for retirement may be more challenging for freelancers as they don't have access to a traditional employer-sponsored 401k plan. On the other hand, an investor focusing on real estate or dividend income has the opportunity to generate passive income streams. Investing in real estate can provide rental income, tax benefits, and potential appreciation of property value. Dividend income from stocks can offer a steady stream of cash flow, potentially growing over time with reinvestment. However, investors must consider factors like market volatility, property maintenance costs, property management fees, and taxes on investment income. In terms of savings, the freelancer has the potential to save on commuting costs, wardrobe expenses, and dining out for lunch. They can also deduct business-related expenses for tax purposes, such as home office deductions, software subscriptions, and travel expenses. On the other hand, investors may save on taxes through depreciation, deductions on rental properties, capital gains tax advantages, and qualified dividend tax rates. However, both structures come with potential costs to consider. Freelancers may face higher healthcare costs, self-employment tax burdens, and difficulty securing loans without a steady employee income. Investors may incur fees for property management, real estate commissions, brokerage fees, and capital gains taxes on investment earnings. Overall, the decision between being a freelancer, making $100K a year, and an investor focusing on real estate or dividend income depends on individual preferences, risk tolerance, financial goals, and long-term investment strategies. By carefully weighing the pros and cons of each structure, individuals can make informed decisions to maximize their earnings and savings potential. When should you switch business structures? It's a common question many small business owners face as they navigate the complexities of running a company. Here's a rule of thumb to help guide your decision-making process. If your profit is below $60,000 per year, sticking with a regular LLC may be the best choice for you. LLCs offer simplicity and flexibility, making them a popular option for small businesses just starting out. If your profit falls between $60,000 and $150,000 annually, it may be worth considering switching to an S Corp. S Corps can provide tax benefits and liability protection that LLCs may not offer. However, if your profit exceeds $150,000 per year, you should strongly consider switching to an S Corp. As your business scales and you begin hiring employees, the S Corp model often becomes more tax efficient and advantageous for larger businesses. Ultimately, the decision to switch business structures depends on various factors such as your state laws, industry regulations, and personal preferences. Whether you prioritize simplicity or savings, it's important to carefully weigh the pros and cons of each structure to determine what will work best for your business. So, when should you switch? Consider your profit, growth trajectory, and long-term goals to make an informed decision that will set your business up for success. Are you looking to set up an LLC or S Corp for your business, but feeling overwhelmed by the process? Don't worry, there are tools and resources available to help make the process easier for you. If you're a freelancer, Collective.com is a great option. They handle everything from LLC formation to S Corp election, payroll, bookkeeping, and taxes all in one place. This can save you time and hassle, allowing you to focus on your business rather than getting caught up in paperwork and administrative tasks. For those looking for more affordable options, both IncFile and Zen Business offer basic LLC and S Corp setups at a reasonable cost. This is a great option for small business owners who are looking to keep their initial expenses low while still ensuring that their business is set up correctly. Once your LLC or S Corp is established, you'll need to keep on top of your bookkeeping and tax filings. Bench co-specializes in providing these services for small businesses, taking the stress out of managing your finances and ensuring that everything is in order when it comes time to file your taxes. If you're interested in any of these tools, you can find more information and sign up through the links provided. And as always, it's important to do your own research and ensure that these tools are the right fit for your specific business needs. Setting up an LLC or S Corp doesn't have to be a daunting task. With the right tools and resources, you can streamline the process and get your business up and running in no time. Are you a freelancer or investor looking to maximize your profits? In 2025, the choice between setting up as an LLC or S Corp could potentially save you thousands of dollars. Starting out as a sole proprietorship or LLC is a simple way to begin your business journey. It provides you with liability protection and some tax advantages, which can be beneficial as you grow your income. However, as you start making significant money, transitioning to an S Corp may make more financial sense. By switching to an S Corp, You may be able to reduce your self-employment taxes and save on overall tax liabilities. This decision could ultimately save you thousands of dollars in the long run. If you're unsure which structure is right for you, drop a comment below for a free checklist comparing both LLCs and S Corps. And don't forget to like, subscribe, and hit the bell for more money smart videos from Being Financially. Make the smart choice for your financial future. Start simple, grow smart, and switch when the numbers make sense. See you in the next one.